Welcome to TLC, where we dive into the heart of our local community, its wineries, business, and real estate. Hi, I'm Troy Anderson, along with my co host Pamela, and we're here to bring you a new perspective on what's happening in our community. And we have a special guest this week, Bernie Martin. He's the managing partner of Summit Insurance Group right here in Woodinville. Welcome,
to the
Bernie.
show.
Thank you for having me.
All right, are we ready just to dive in? I know we're excited about whatever Troy's brought for us today.
Yes.
So this is Sipping on Success, our first segment of the podcast, where Troy brings us in something delicious, we hope. And this week, it's usually good. So, I'm not worried about that.
Should I start off and call it a porch pounder?
Sure, let's do that. Let's get the porch pounder out of the way.
Yeah.
Clearly, by the look of the bottle, it's not a porch pounder. So what do you have for us this week, Troy?
I have got a local winery. They have tasting rooms here. That's Red Mountain Estate Fruit from Ambassador Wines of Washington. And I've got a 2005 Syrah.
2005.
Delicious.
Yeah, it's been well, the label's kind of beat up because it's been in my wine fridge that I don't have anymore.
That's very bougie when you say it's been in your wine fridge.
Yeah, the Syrah bottles are a little more plump than a regular, normal like Bordeaux bottle.
Okay.
And so the wine fridges, they make them to hold a bunch of wine bottles, but not Syrah bottles.
Oh, I did not know that. All right, so Ambassador Winery, they have tasting rooms. Whereabouts is the tasting room? I'm not sure I know where it is.
Wine Alley.
Yeah, right
In
on the
Wooden
corner
Creek.
of Wine Alley, just adjacent across the alley from Wooden Creek Kitchen and Tap.
Okay.
Lovely tasting room.
Looks
Very
like
nice
you're
people.
mangling that cork.
Yeah, the cork, it's an older bottle of wine, even though it's 2015. It's a little bit older, so yeah, it's definitely giving me a hassle here. Just
Let's see if we can
ease
got
it
it.
out of there. Oh, there it comes.
Oh, that was disappointing.
Yeah, no pop.
No
No
pop, okay.
pop, but at least we don't have a bunch of cork in our wine.
Mm-hmm. All right, so why did you pick this winery before we partake in a taste of it?
We used to be club members there. They are excellent wines, very high quality. And I had this one around, and I knew Bernie liked Syrah, so I brought it in for Bernie.
Syrah. Thank you for bringing that out of your
Yeah,
cellar.
Yeah.
Not just like it, you love a Syrah.
Oh,
Okay.
I love the Syrah.
Right
So
there.
let's see how it's held up.
Yeah.
Ooh, it's got great color. Give Bernie a little extra.
I was going to say,
swig
that's
here.
quite a big pour that you've got
Yeah.
going on there,
Glug,
Troy.
glug, glug, glug. Well, it's for Bernie.
We should probably preface this then that you guys, sometimes drink together glasses of wine at the local.
We have business meetings every now and then, yes.
Is that what we're calling them these days?
We've
Business
been known
meetings?
to frequent a
Thank
few
you.
of the local wineries, yes.
Yeah,
Okay.
in fact, I met Bernie at a winery chamber event years and years ago at Janik, and we became instant friends. He bought a bottle of wine and brought it over to the table.
How easy was that? You're easily swayed.
I think the first time I met you too was it was actually at Village Wines, and the first thing you said, "What can I get you to drink?"
Yes.
Like, okay, we can be friends.
It's an icebreaker for sure.
All right, well, cheers.
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 Here's to what looks like a very promising glass of wine. So
Got great color. Good smell. I mean, I'm not a huge Syrah fan.
I
Yeah.
am quite a Syrah fan,
Are you?
actually.
Okay.
Yeah,
That's a mouthful. That's
Is
good.
it? Okay.
Mhm.
that is very tasty. So right now comes the fun bit where we try and describe it. I'm just going to be quiet for a minute and see what you guys have to say.
It tastes like red wine.
Tastes like red wine. It's
Pretend we've got like smell-o-vision but taste-o-vision for the podcast.
Very dark.
the inside of the bottle has got a lot of sediment on it. 'Cause
What
it's
does that mean?
Well, as wine ages, the small particulates settle to the bottom, and in the bottle it's been laying on its side for a while, so the one side kind of up towards the top of
Oh, I see. It's almost like a grain through
Yeah.
the... Okay.
But
All right, Bernie, what are you tasting?
Very dark berries. Very smooth. Very full, rounded
I
fruit.
like this for a Syrah.
It's not as dirty as some of the ones that I
Right.
drink, which
Yeah.
I know you have a problem with.
I know.
So when you say dirty, Bernie, what does that mean?
They, depending on the age of the Syrah, they get a little bit musty on the back,
Okay.
and I don't think Troy's a big fan of that. So, I love it.
I don't like the tobacco and the the heavy fruit forwardness.
Hmm.
I like more of a.
I unfortunately like the fruit forward, middle, and back.
Do
And
you?
this is-
Yeah.
this is-
Well, this one's really good, actually. Kudos to Syrah, the winemaker. You know, this is from Dick Boucher's vineyard.
and that's always good juice.
Yeah, Dick makes good wine, good berries.
Does it
It's
have
90%
legs?
Syrah and 10% Grenache. So
Okay. I
Maybe
heard
that-
somebody say once before that that wine's got good legs on it. I don't know what that means.
legs
but-
is when you tip the glass and kind of swirl it in your
Oh, okay.
glass. The residue that's left over leaves what's called legs on the side of the wine
There
or
you go.
glass.
Want to make sure our audience knows what we're talking about. Okay. Well, what's the verdict? Does it?
Does.
I would say so.
Very
It's got
nice.
Yep.
some good legs, right?
Yep.
Yeah, well, I do like Syrah. It's delicious actually. It's not it's very fruity, but not in a kind of astringent kind of way. I can taste some of those kind of dark fruits in it. It's a little dry, but not overly so. It's just kind of
Right.
on the tip of the tongue
Right.
where that dryness hits, as opposed to all over.
Right, front of the mouth for sure.
Yeah.
It-
See, I'm learning something.
What I found is that I can't really describe what it tastes like. I just know I like it,
Yeah,
and if I like it, I like it.
everyone has a different palate,
Exactly.
so
Mm-hmm.
you know, different wines for different people, and even different like times of day or weather conditions.
Well, I
all
found
that
8
stuff.
o'clock in the morning is not appropriate for me, but anything after that. I'm good.
Mimosas. They're gonna think we're big drinkers here.
I don't know, I taste a little bit of blackberry in there.
Yes.
Yeah.
Definitely cherry, blackberry.
Yeah, it's good. I feel like this isn't kind of everyday wine. Like you don't necessarily need to keep it for a certain meal or a special occasion. It just feels like it's an easy drinker.
This one's mellowed out a little bit, I think, with the age.
It's an everyday for me because that's what I drink every day is Syrah.
Okay.
So
Yeah.
whether it's Ambassador or any of the other Woodinville wineries, I'm all about darkness, Syrahs,
Okay.
Yep.
deep, bold wines. It doesn't have to be winter, summer, fall, spring, early morning, afternoon, evening.
So we're just gonna mainline it to you.
Yes. Yes.
This would go good with lamb. It would go good with a nice juicy steak.
Yes. By
Um,
itself or with food,
yeah,
alone or with somebody, it's all good.
it's all good. All right.
Actually, curled up with a book and a piece of chocolate.
Yes.
Oh, for sure.
Yeah.
Chocolate.
Chocolate. A good milk
Nice.
chocolate.
Yeah.
Nice warm fire.
Yeah. We're talking about fires and chocolate in the middle of summer.
I
This is
know.
great. All right. Well, Troy, thanks very much for bringing that in. It's absolutely delicious. I
Yeah, and you
appreciate
should
that.
definitely visit Ambassador over in the wine alley there, right in downtown Woodinville, by Wooden Creek Kitchen and Tap.
I feel like you maybe thought that I would like this one because you gave me a bigger pour than you normally do.
Oh, I did?
Yeah.
I was feeling generous today, wasn't
Okay. Well, you can't take it back now, so well. All right. Well, fantastic. Thank you so much for that. Let's take a really quick break, and when we come back, we're going to talk with Bernie about all things insurance. So stay
Yes,
tuned.
I've heard there's a lot of news about that.
Yeah, there definitely is. So we're going to put him through his paces and find out what he has to say about insurance. So stay tuned. We'll be right back after this very short break.
See you in a minute. Are you in the market for a new home or looking to sell your current one? 10 Home Team is here to help. As community-focused real estate agents, we are dedicated to providing personalized service and support throughout the entire process. Whether you're a first-time home buyer or a seasoned pro, we've got you covered. Let us take the stress out of your real estate journey. Contact us today at 10 Home Team and learn more about our services. Welcome back to TLC, 10 Life Community Podcast. And we're here with Bernie Martin from Summit Insurance. Bernie, hey, I've heard a lot in the news lately about insurance, but I just wanted to get a little bit of background on you and your experience as an insurance broker in our local community, and maybe what differentiates you as a broker versus an agent.
Absolutely. So I've been in the insurance business about 32 years
Just getting
and
started.
just getting as a baby.
You're
I
a
started
newbie.
as a 7-year-old. I started, but basically was a captive agent which is really the difference between an agent and a broker is whether or not you represent one company or many. And an agent typically would be a captive agent, and I was a captive agent for 25 years.
Oh, wow.
Opened my brokerage up in 2015 here in Woodinville, and have been representing numerous companies over that the last 8 years. So the difference, again, with agency versus brokerage is just the ability to shop or look for opportunities with other carriers that you wouldn't normally have as an agent. You were just stuck with one company.
Gotcha. So like a State Farm, you'd be
Pretty much
So
limited
State
to
Farm.
whatever product offering they would have at that time, and,
Okay.
and if you can't do it, they'll seek out the services of a broker
Gotcha.
for business they can't write.
But you're a broker, so you just shop all of them to
I-
start with.
As best you can that fits the market,
Sure.
the product based on who the client is. But yes, we would be able to take it out and give them multiple options versus one option.
Gotcha. Yeah.
All right, so before we jump into kind of the products and services that you can offer to our listeners, the community at large, I wanted to talk about the current insurance landscape. Now, Troy alluded to this before we went to the break, and kind of what's been in the
Right.
news with respect to insurance, like those, I feel like climactic jumps in insurance
Yes.
premiums. I know we felt it in my household. So like I said, we've been hearing a lot about it in the media. And as a consumer, we want to know what the driving force is behind those those significant pricing jumps. Is it, and also with that, is it national or regional? And if it's more regional impact, can you explain why?
Well, right out of the gate, it's a national issue. What's happening now across the country, I think if you see in states like Florida, California, Texas, Louisiana, coastal states that are subject to major catastrophic flooding and hurricanes and such, that carriers are actually pulling out of the states. They're literally, we got news today that Farmers is completely canceling 100,000 policies in the state of Florida. That's
wow.
one of many carriers that have left the state. They're having a rough time just trying to insure anybody in Florida. But it's also happening in California with wildfires. But on top of that, you've also got a lot of different things. People, apparently during the pandemic, they forgot how to drive, one. Two, there's an increase in catastrophic.
Those few weeks where there was no one on the roads.
Something happened. I don't know what happened. But catastrophic losses have increased over the last 3 to 5 years. Carriers are really getting hit hard on major losses. Think about inflation, what it costs to repair a car, availability of parts, time delays for repair facilities. All that stuff drags out over a period of time, which causes carriers to pay more out of pocket for all of those services, and then that reflects back to the individual consumer. And people think, well, why is it happening to me? It's not just happening to you. It's not about you. Insurance is a pooled risk so that everybody's sharing in the wealth of the increases, and that's what's happening right now, and it's nationwide, and it's worse in some states than others, but typically what we're seeing is across the country, everybody is seeing it's not 10% increases, it's 50%,
Yeah.
it's 100% increases in
I've seen that in homeowners insurance.
oh yeah.
I mean, when we're quoting people out, it's like twice as much as it
Yes.
was
Yeah.
2 years ago even.
And it's tough from an agency standpoint or a broker standpoint, because when people call in, they go,
How come you're charging so much?
Exactly. And what they need to know is that we don't set the rates, right? I mean, those are determined by the carriers, and we are just the go-between between the carrier and the consumer. I cannot negotiate with an insurance company about how somebody's rates are individually. And
Now, didn't the state of Washington change something about credit reports or something like that?
yeah, first of all, they banned credit-based underwriting, which
Okay.
carriers then took the stance that if we can't get that report, we're going to give a higher rate to everybody. So they pushed
A students and F students get a C.
pretty much,
Oh,
or
geez.
maybe more like a D, because they wanted
Gotcha.
they pulled the people who had better history of insurance or credit suffered more than the people who were already paying that
That
cost.
seems to be the case.
But that's changed back. Now we're back to where they're allowing
credit-based?
Yes.
Oh.
Yeah. So
Oh,
it's
I didn't
being
hear that.
allowed in the state of Washington. So
Okay.
their carriers are reintegrating it back into their rate structures, and it's helping a little bit. But we're still faced with double digits and sometimes triple digit increases across the board, and it's a hard phone call to take, because I can see them coming before they happen.
Right.
I mean, they notify us that, hey, you got a 150% increase. And we typically want to reach out to the client before just to try to soften the blow, but it's still
Yeah.
not an easy message to
Yeah,
deliver.
and as a consumer, it's a hard pill to swallow, especially if you're somebody that's never claimed off your insurance,
Exactly.
right? So you're paying in, you're
Right.
never taking out, and yet your premiums are going up and up and up. Now, I wanted to come back to something. I know you don't have a crystal ball, but you mentioned there that some of the reasons why those prices have gone up is things like inflation, the cost of parts, etc. Now, if and when those prices ever come down in the marketplace for inflation, etc., do you think that there will be a reflection on that in premiums, or is it just you're smoking? And what I want to hear is, yes, Pamela, it's going to come
Pamela.
down.
We're at a new threshold,
Mm-hmm.
and companies have taken such huge losses over the last couple of years. I think State Farm the industry lost $8 billion in the first quarter of 2023, and I think they're on track to do $5 billion in losses the second quarter.
Mm-hmm.
That doesn't bode well for what's coming in the future. They're still trying to catch up from pandemic expense. So no, I don't think that's ever going to reflect backwards, because you look at also the what it costs now to rebuild homes and repair cars. It's a tough pill to swallow.
Yeah, I would agree with that. So, all right. So, I mean, risk management. Basically, insurance is often a means of risk management. Can you discuss how insurance can help individuals and businesses mitigate potential risk and protect themselves against unforeseen, events? I mean, obviously, you talked about hurricanes and that kind of thing. Are there some specific risks that are frequently overlooked? I mean, let's talk about that more regionally as opposed to Florida, because I think, as much as I'm sure there are people in Florida listening, this is a community-based. Troy's got properties in Florida, so he's interested. But maybe more on a kind of local, what are some of those unforeseen things that people...
Yeah. I would think risk management is just basically evaluating where you are as an individual or a business and what it is that you value that you need to protect from whatever loss that might happen. And what you need to think about insurance is it's really pennies on the dollar. If you feel like you can replace something that gets destroyed or damaged or whatever happens, then you're going to carry that risk yourself. But if you want to share that risk with an insurance company, then you pay a premium for that. And if something catastrophic happens, there are dollars there that you didn't have available before. Risk-wise, what people are missing, I think, typically, what I'm seeing is just undervaluing what it is that they stand to lose, one, but also from a liability standpoint, what people are willing to sue them for if they are found liable for something that they are a cause of. I think people will say, well, I don't have anything. Well, they're not thinking of everything that they could possibly lose, and that's where you need to talk to
like
an agent or
equity in your house.
Right.
Yeah.
It's your income. It's your stuff. I mean, and there are legal limitations on some of that stuff as to how much they can actually go for. But I think liability insurance is probably the most underrated coverage, and that includes umbrella policies and such, because they're literally the best legal team you'll ever have. If a carrier has to defend $1 million instead of $25,000, the more likelihood is that you're going to have support from your insurance carrier if you are found liable in an insurance situation.
So, I mean, Troy, liability insurance, do you understand kind of where that would be placed? I'm not sure that I do as a consumer. I mean, I've heard of an umbrella policy, but...
Yeah, so we have umbrella policies just because we don't want to carry large policies for each property or each car, whereas the umbrella policy covers everything, up to a certain amount of money.
Okay.
So you threw out $1 million, that's a lot of money, but in today's environment, that's not a lot of money when it comes to being sued or having a catastrophic loss.
Correct.
And so I wanted to bring something up. Just I've talked to a lot of homeowners that have been in their house a long time. They've been with Joe State Farm down the street forever, and they've never updated their policy.
Right.
So they're still their policy is way insured.
And that may or may not be the case, because most carriers have built into their policies that will normally evaluate or will accelerate the coverage on the policy over a period of time to keep up with inflation.
Okay.
They have to make sure that they provide enough especially like on a homeowner's policy. But I would agree with you. In 15, 20 years ago, someone said, well, $100,000 of liability seems reasonable. $100,000 anymore isn't worth what it was 25 years ago. So
Right.
you may want to look at evaluating your policies and updating them, as you said, to current market conditions or current risks. And that is, if someone's hurt in an auto accident, they're not coming for $25,000.
No, that's a day in the hospital.
Yeah, so you've got to, it's imperative that you talk to your agent, it's imperative you talk to your broker, you look at it, ask a lot of questions. I think that's the key thing, is having a good relationship with your person, whether they're captive or broker. Have a good relationship, ask lots of questions, and find out whether or not you're sufficiently covered.
Because you talk about liability, and most people think of that with respect to car accidents, right? But you're also on the hook if somebody trips over on your
Correct.
stairs going up to your property.
Right.
And I'm not sure that everybody understands that even
Right.
though it's not your fault, they decided to come on your property,
Yes.
and they're clumsy and they trip. That would be me usually.
Right.
Because it's a fairly litigious country that we live in, that there's always somebody that's going to say, well, okay, this is your fault. That liability insurance is where that comes into play on those kind of scenarios, right?
Correct, yeah, your homeowner's policy would cover you anywhere in the world, basically, if someone were to sue you for some reason. And then an umbrella policy, as Troy mentioned, would be an overarching additional amount of coverage based on what your risk profile is and whether or not you need it.
Those umbrella policies have, you have to have a certain amount of underlying coverage
correct.
before you engage the umbrella, correct?
Yeah, and like I said, it's the best legal defense team you'll have.
And they're super, I think they're inexpensive,
Yes,
still,
relatively.
yeah.
Yes.
They've gone up, but.
Yes, but I think, as Pam mentioned, it's you. If you don't understand what is covered under which one of your policies, ask your agent.
Yeah.
And it's not a hard conversation to have with them, and it's the least expensive portion of your policy, and it'll be the one that you'll appreciate the most if somebody comes after you. So.
So
I know. I mean, I have a couple cars. I have a couple teenagers, and a couple houses, and a business, and by the time I was trying to wrap my head around that, I don't know. I get confused. Is that policy for?
Well,
this?
you're a
What
simple
policy
man,
is for
Troy.
I try and keep it simple. That's part of our motto around here.
Yeah.
Excellent, simply done.
Well, there's simple, and then there's just willful ignorance, and then some
Yeah.
people will get a lot of information in the mail, but they won't even read it. Now, as a broker, I would recommend that you read it and understand it. If you don't, ask questions, because the worst time to find out you didn't have what you needed is after the
for
incident.
sure, for
Right.
sure.
And so you talked about catastrophic events like, hurricanes and stuff. Well, on the West Coast, I think one of the things that most people are like, well, do I get insurance for this or don't I? Is it covered under my umbrella? Is earthquake insurance. I mean, we've had a few.
Or
not-
flood.
Yeah.
Flood, I think, is a more prevalent problem. Your water heater breaks, you have
Right.
pipe break in the ceiling. It's not a flood like a river.
Yeah,
flooding.
that's a little different. There's water loss, and then there's flood loss. There are
Okay.
different, and then that again, you've got to read your policy and understand what is flood versus what is a water water loss. It can get pretty deep into the weeds on some of this stuff, but I would just recommend that you talk to your agent and ask enough questions to understand what it is. You don't have to become an insurance genius, but at least understand.
And you guys
the basic-
provide those services?
Absolutely. Well, I would take a phone call from anybody, whether they're my client or not. If they had a question about insurance, I'd be more than happy to answer it. I've answered so many of your questions because you're always doing things that are out of the ordinary. But
So what I'm hearing is you're not just straight down the line when it comes to insurance coverage. I mean, you offer plenty of different policies for different avenues. You've touched on the umbrella, you've touched on homeowners, you've touched on car. Maybe people don't know about renter's insurance. I mean, there are some people, maybe they're renting a condo or whatever. That's maybe not a thought. Renter's
Right.
insurance.
right, a lot of times what's happening now is if you a lot of that stuff ends up being mandatory. You're required to have those types of coverages. So we do offer all lines of personal lines and coverage, and that would be everything that you own, whether it's a car, a boat, an ATV, a motorcycle, recreational vehicle, your car, whether you're renting, but we also do the full line of commercial insurance too. So I don't know if I mentioned that, but as a broker, we can pretty much write anything there is, whether or not the client wants to pay the premium. That's the
Well, that's
only.
what it comes down to money with everything,
Of
right?
course, of course.
Well,
Yeah.
and you have to weigh the deductible
Exactly.
versus the premium, in your risk assessment.
Well, you mentioned earthquake. One of the examples I give to my clients is, what is the deductible on an earthquake? It's typically between 10 and 20% of the structural coverage. So basically, if you have an earthquake, you have to, if you got $1 million house, you got to have $100,000 or $200,000 of damage in order for it
To even kick in.
and that applies to your personal property as well. Is that worth the $5,000 it's going to cost you for earthquake for $1 million home? I don't know. That's something you have to personally weigh out. I just figured in my house, I didn't find that risk and the reward to benefit was worth paying for the earthquake
I was
insurance.
going to
That's
say,
just me.
most people around here do not have earthquake
No,
insurance.
no, or nor flood insurance.
Right,
But
unless you're in a floodplain.
correct, and it's required, and that's, that I will tell you, flood insurance run by the National Flood Insurance Program is so far underwater, literally speaking. I mean, that's no pun intended.
Publishing.
That the rates have gone. I have a client who used to pay $10,000 a year and is now at $50,000 a year for a commercial
Holy
building.
moly.
Yeah, so and that's 5 years. That's how it's gone. 10,000 more every year, and it's not stopping. I'm just telling you.
And so the commercial building, I presume, sells products or services, so they have to bake that into their prices, right?
Well, they have a finance building.
Yeah.
So an insurance or the finance company requires. Yeah.
Well, sure, but then
And they're in a flood zone.
the consumer ends up paying for that at the end of the day, is what I'm saying.
Yes.
And there's silence.
I know, it's a little depressing.
It is depressing, but it's. I will tell you that it's in the time of a loss. Everybody else is coming to you for money because they need to repair your stuff, and the only people that are coming to the table with money are
Is
your
the
insurance
insurance.
company. So, as much as you hate to pay their premiums, and I would caution people also is the frequency of claim activity, and it can impact your insurance. Is to think about and talk to your agent about whether or not filing a claim is actually a reasonable thing to do. Does it make sense? Because you got $1,000 deductible and you got a $2,000 claim. Do you necessarily want to collect the extra $1,000 when in fact your insurance rates will go up by more than $1,000 over the next 3 years in total?
And I want you to correct me if I'm wrong here, because I'm not saying this for sure, but I had heard at one point from another agent, another broker actually, years ago, that if you do claim on your insurance, there are some instances where that company will then decide not to renew your policy after you've made a claim. I mean, is that?
That's not a blanket statement. It's potential.
Right.
You're probably going to see an increase in your rates. That's a given because you now have your no claims discount
Bonus has
goes away.
disappeared. Yep.
It's typically most carriers will, if you've been with them for a period of time, will keep you with one claim. The second claim is the one that's going to get you, which is why you don't want to use any of your insurance as a maintenance policy. You want to use it for catastrophic loss and take care of the little things yourself. It makes more sense. And I know people go, why do I pay my premiums? I'm telling you from experience.
That's why it's called an insurance policy.
Yes, and in the way the market is now, it's worse than ever. And they're looking for a reason, one, to get rid of you as an insured, two, to raise your rates, and three, to just restrict any additional coverage that you might want. And they're doing all three of them. And that's just the market now. And it's the worst I've seen it in 30 plus years. And you'll hear that from every insurance agent you talk to.
Well, I like your honesty with that. It's like you're not sugarcoating anything for us. Like, yeah, this is the way it is. We know you don't like it, but
well, I try to lay that all out to my clients and let them understand that it's not me and it's not them. It's everything in combination, and it's brutal, but we do what we can, and and it's not
variables at play there.
yeah,
right?
and it's not always best to jump ship from the carrier you're with, even if their rates are going up, because you might jump onto another carrier that's on the way up right behind you.
right,
So it's
and you get in when you think it's lower, and then
right.
all of a sudden
it's higher than
you're
you were
up
paying
again.
before, and you've lost all of your capacity to have any longevity with the company or with which there's discounts for that. Moving from company to company is a huge hit on your risk profile.
Okay.
But the lizard said I can save 15%.
Well, if you can, I don't want to pay for insurance at all. So even as an agent, so
Right?
if I could pay zero, that would be great. Unfortunately, I wouldn't have very good coverage. So be careful what you get,
Yes.
and make sure you understand what it is you're doing. And if you're capable of managing your own risk, and evaluating the policy that you're getting from that there lizard, go for it. But the problem is most people say, well, I want full coverage, or I want what I need, and if they get liability only and no comp, no collision, coverages that they should have had and thought about, medical payments or personal injury protection. There's so
or
many
an insured
things.
motorist even.
Anything, yeah, and they're, because they're chasing the almighty low premium, which you
get what you pay
you
for.
get what you pay for,
Yeah.
and relatively speaking, from carrier to carrier, you can save a little bit of money, but again, it's not always the best course of action. I've told people from captive companies that it makes more sense for them to stay where they are than to come with me to save $50 or whatever the
Right.
number is, just because they're losing out on some longevity discounts that they're not going to see
Gotcha.
with the new company.
By the same token, so don't jump from agent to agent or company to company. Is there a danger if you stay with the same company for 20 years? Or
Yeah, I think Troy mentioned it earlier. It's just how stale is your policy. If you had that long and you haven't really had interaction, maybe your agent's already gone or retired or whatever. Has anybody actually talked to you about your policy in 20 years?
How
And
often should you talk to your insurance agent?
Once a year, 6 months?
Once a year as
Yeah,
a
at a minimum.
Okay.
At a minimum. And just say, hey, is there anything we're not thinking about? Because what happens is companies will add endorsements to policies as the years go by. And it may be available to you, but you don't know it. One of them being like a service line endorsement for everything that covers from your foundation to the street. If you have to dig that up, that never used to be covered. Now all the carriers have it. But if you haven't added it to your policy, you don't get it.
Yeah.
So you have to talk to them to
That's
find
not a
out.
bad one to add on an older policy.
Absolutely. That's what I recommend 100% for anything over 15 years old.
Yeah.
I feel like it's almost like you need a health checkup for your insurance once a year.
Yes, that's a great.
pain in the butt.
Right, but it makes a lot of sense that if you don't do it, you could find yourself in a little bit of trouble. I mean, I don't mean like you
A lot
cut
of
off.
trouble.
Yeah, but
Financially.
Financially, okay.
Yep.
I mean, you've talked about some of the limitations that policies can have, but can you share some light on kind of some common kind of limitations that people might not be aware of? So, for example, I'm going to like from a personal perspective, jewelry, right?
Right.
Yeah.
People might think that all of their jewelry in
Yep.
their home is covered under their homeowner's insurance policy. Now, I have a feeling that's not really true.
That's not true. There are internal limits on almost every item that you might want to talk to your agent about. It's listed in your policy, but if you get a document package and you just toss it in a drawer and you don't read it, you don't understand what that is. There are specific items, typically the jewelry, collectibles, anything of that nature, you'd want to talk to your agent about, should I or should I not have it scheduled? And it separates it from the policy itself so that it's a special limit, special item coverage that specifically applies to that item. And it removes it from a deductible and such, and it allows full coverage for something that was not fully covered. There are very low limits on a policy for, as you said, your jewelry or whatever. So definitely talk to your agent about anything you feel like is out of the ordinary stuff. Your clothes, your furniture, and that stuff is all just covered under the policy. But anything that you think a nice piece of art, maybe even a nice wine collection, collectible art from overseas or antiques, anything over 25 years old that has high value, talk to your agent about it.
Okay, because there may be some surprises in there.
Yes,
Mhm.
yes.
Have you got your wine collection
I
insured?
don't. No. I don't.
But you don't have any good wine. I mean, did I
Oh
say
dear,
that?
you said that on air.
I know.
It's a good one.
It's a
Review.
Syrah, because you won't drink it.
Well, this is actually a really good one, so I'm very happy I'm sharing it with you.
100%.
So, where I
We
was
could
going
keep-
to say something, but it's gone. Sorry.
Okay, well, while you're thinking on that for a moment, then, so some people might not fully understand the intricacies of insurance policies and the importance of being adequately covered. What are some of the steps that you personally take to educate? I know do you reach out to your clients on a regular basis? How do you empower them to keep informed?
Initially, I find it very important to make sure they understand what it is they're purchasing, and how it does apply to them, and to make sure that they don't have any additional questions. But on an ongoing basis, it is imperative that the customer reach out if they feel like they're not keeping up with it. we send out a regular amount of communications, annual review requests, or it's hard to do continuously. You end up with a lot of people in your agency, and it's a time consumer.
You mean you don't have time to do all of that then?
Yeah. I have to go out and drink wine with Troy, so that's very important also.
So I'm just going to put you on the spot here. I don't know the answer to this question, but do you give like seminars to potential, clients or people that are thinking about buying a home so they can fully understand what the insurance?
We have done that in the past. I have several licensed agents that work with us that I have sent out to educational seminars with realtors and mortgage brokers and such, just to give them a basic understanding of what insurance and what needs they might have. In terms of commercial education, it's typically a one-on-one with a client and in their environment, where you're doing a walk around and saying, have you thought about this? Have you thought about that? Have you looked into that? And that's where they're going to learn, and you're also going to learn what their risk package looks like, so that you can make recommendations based on their situation. There's no magic bullet for insurance. It really comes down to having a frank conversation with whoever it is that is offering you coverage, and getting the full gamut of details about what's available and if it matters, or if it can impact your life if you have it or not.
So what I hear you saying is someone who might have some auto policies and a home policy, they need to, at least engage with their brokers 6 months to a year.
Yes.
Every 6 months to a year. But if they have more policies, more intricate,
Yes.
commercial properties maybe.
Yes,
Something
Troy.
like that.
Why don't you call me more, Troy?
You need to go out and drink wine with Bernie more often. and talk
I think
about
it's just an
insurance.
excuse for you guys to go and try out some of the other wineries.
Everything's a write-off.
It's still an expense.
Yes.
Is it beneficial to bundle insurance?
Absolutely, yeah. I cannot stress enough, from a carrier standpoint, even in a claim situation, you have more juice, more pull, more whatever with an insurance company. If you've got a full range of insurance package with a carrier, they're going to look at you differently than if you're just a renter's insurance. And I know it's hard to understand why that would be, but carriers they're looking at, how badly do they want to keep this customer? And if it's a commercial client, it gets even more intense. It does make a difference, and it's from a cost standpoint, with the discounts that are cross discounts that come along with it, it can be 25 to 30% different in your rate if you have multiple policies with the same company. So
Makes sense. Buy in bulk.
Some
Yes.
good news.
yeah, well, is it going to offset the rate increases we're seeing? No, but it does make a difference, and anything you can do. And before you go online and change your own policy, please call your agent so you understand, or they understand what it is that you're doing. Because a lot of companies now, you can just go online and make your change yourself, and the agent doesn't know what's going on because they don't notify
Right.
the agents all the time. They're supposed to, but
Well, and you don't necessarily know the ramifications of that.
yeah, as a consumer, you might not know what you're missing by taking something off just to save $5 a month. So
Right.
What I'm hearing is have a conversation with your
Yes.
agent or your broker, and if
Absolutely.
you're not sure, call Benny, because
Yes.
he'll have a
I'm
candid,
here.
Clearly, you'll have a candid conversation with them
If you
about
bring him a bottle of Syrah, he'll talk to you for a while.
You can sit in my office with a bottle of Syrah, and I'll take an hour with you, easy.
All right. Before we kind of shift tracks a little bit to the community aspect of this, you got any more questions on insurance for
I don't know. What's the forecast? I mean, everyone wants to know what's going to happen in the future. You think rates are going to continue to rise, or you think it's just a little ledge that we're bumped up to, or it's going to plateau out? Or
Please say plateau. Please say plateau.
It will plateau someday.
Yeah.
Right now, we're on the upside of the mountain. We're still headed
Okay.
up.
We're still headed up.
And I don't know. I mean, I talk to a lot of insurance carrier representatives, try to get a feel for where it's at, because I want my own clientele to know that. My customers are asking the same questions. It probably we're 6 months to a year to go. But a lot of the carriers have already taken the jumps. They're already into it. And until profitability turns around, it's not going to change.
Gotcha.
Because they cannot. What happens is a company will go to a state and say, we need 50% increases, but the state might say, we'll give you 15.
Oh.
Well, they're going to
'Cause
come
that's
back
all
next year.
regulated by the
Exactly. So
insurance
they're
commission.
limited as to how
Yeah.
much they can pull. But they'll ask for it every 6 months or every year. And like, again, it's been 30 plus years in the business. I've never seen a market like this where they're getting the rate increases from the states because they can prove we're losing billions of dollars.
Gotcha. The balance sheets.
Yes. And being businesses, they make a profit. They're not in it to lose money,
Right.
but they're also in it to protect people, and that's all part of the package. And we understand as a pooled risk, we're all going to share in that, the benefit and or the downside of it,
Love
unfortunately.
that. No.
I feel like we need a wah, wah, wah.
No, you wait till your premium comes, then you go, whoa, whoa.
Already had that.
I know.
Pam, you should
I know.
call me, Pam. I haven't
Okay.
heard you call me yet. I don't know why. You know.
We'll give you a call after the show.
All right.
All right. So, as we alluded to at the beginning, we are kind of a community-driven podcast. Let's kind of take us kind of a little bit of a shift to the community aspect. How do you as a broker actively contribute to the well-being of our community?
Well, I support them wholeheartedly in drinking wine. I keep everybody
Bernie
afloat in
is-
that market.
Bernie is one of the biggest supporters of
All
our
right, well, let's do
community I've ever
initiatives
met.
and partnerships, anything that kind of
No,
benefits other local businesses
Yes,
and residents.
as Troy mentioned, we met at a Chamber of Commerce meeting. We participate fully with the Chamber in all this and try to support all the drives they're doing. And we've worked and done fundraisers for Woodinville Firefighter Fund,
Homeward Pet.
Homeward Pet.
Yeah.
We've done women's shelters, food drives and things of that nature that, just trying to give a little bit back as best we can, and participate in the events that the chamber puts on. And it's fun because we meet a lot of neat people. But I find that the best people are the people that are out drinking wine. Good customers. I find a lot of clients and customers and friends that way. And
Bernie's out networking.
I am apparently a member at a lot more wineries than I actually am. Because
Really?
every winery I go into, they all think I'm a member of.
Yeah.
But that might be because I go there a lot.
You're supporting local business.
I am. I am a full supporter of that, of the local business community.
You're very generous.
Thank you, Troy. I appreciate that.
Well, I think that's important. It's not just like you're helping the residents, you're helping local businesses, but you do try and give back. I think that's really important with any community, any business in our community is that kind of give back portion. So whether you're supporting them by drinking their delicious wine or fundraising or any of those things, I always think it's important for our listeners to hear that it's not just that transactional side of it
Right.
that really we highlight, and we want people to understand that you have an investment in the community, and that's how you give
I have a
back.
very good role model. I don't know if you know him. Troy.
Troy Anderson.
Troy
by any
Anderson
chance?
from
Okay,
Tin.
Good
Well,
to
you're
know.
yeah,
I've jumped on a few of his things because he's doing them every 3 to 6 months, and it's impressive. First of all, how he thinks to do all the things. I don't want to have the time, so I like to just connect into and plug into what he's doing because that's the only way I really know how to support it. Thank you, Troy.
Bernie.
You are.
Oh, it's a little love fest going on over
Yeah,
here.
yeah.
All right, so before we finish up this segment of the show, community gems.
Yes.
All right, share with our listeners some hidden gems potentially in Woodinville or places that you love to frequent that, we know you like the wineries.
Yes.
Is there, some favorites, some standouts, some hidden gems that other people might not know about?
Well, I think Wine Alley, if you haven't been down to Wooden Creek and checked out Wine Alley, you could literally spend all day, have breakfast, lunch,
Could have
and
breakfast.
dinner, and drink wine in between all three of those if you were so inclined. So that's a place I like to go, and I meet a lot of people there. I also really like in the fall time, which would be Fireside Lounge at
Willow's Lodge.
Willow's Lodge.
Really? I've
Lot-
been there forever.
Yes, it's
Yeah.
wonderful. So go there because they have the fireplace, which is really nice.
Yes.
But any comfortable wine room for me is considered a community gem because I like a little bit more intimate, not giant location. I like to be able to sit down and talk to either the owner or the winemaker or whoever's serving, or any other people that might be from out of town, and I'll help educate them about.
Tell them how wonderful our community
Yes,
is.
how great Woodinville is. Outside of Woodinville, there's a number of places, obviously. Russell's in Bothell.
Russell's and Bothel's,
I
definitely.
love that place.
Yeah.
I think our first few podcasts, I think you mentioned it on every
Yeah.
one. That
I know,
mistake.
I know.
We haven't mentioned it in a while. Let's
Yes,
mention
here
Russell's
we're
again.
back to Russell's.
Porch Founders and Russell's.
Yes, wonderful place. And there's a lot of places near Woodinville, but there's certainly plenty to do. And I'm looking forward to more gyms that are being built as the community grows.
Yeah,
Which
there's
is
a lot
cool.
of buzz around that stuff that's going on. There's a lot of polarizing
Yes.
opinions.
I'm of the non-polarizing opinion. I think it's good for the community. The more the merrier. Everybody benefits from it, so I'm all for it.
Yeah.
Other than traffic, if the people could just walk here, that'd be great.
Yeah, walking would be good.
Bikes.
I can walk from my house. to most of them.
Okay. sorry
You've
for
done it
you.
before. I know that.
I know.
Yeah, but I'm sure the walk back up the hill's a bit of a slog.
That's the one that's the challenge. Yeah. Uber.
We need a lift service up there. All right, we're going to take a really, really quick break, and then we're going to come back with our real estate roundup. Stay tuned.
Hey there, homeowners and home buyers. If you're looking for a real estate team who genuinely cares about your needs, Tend Home Team is here for you. We're not just focused on making sales, but on building long-term relationships with our clients and serving our wonderful community. Whether you're buying or selling, let us guide you through the process and help you achieve your real estate goals. Connect with Tend Home Team today and discover a better way to navigate the market.
Welcome back to TLC, 10 Life Community Podcast. I am your co-host Pamela, and I'm here with Troy and Bernie. And it's time for our real estate roundup. Are you ready for this, Troy?
I am.
All right, we'll keep it brief, but here we go. With interest rates on the rise of late, people may find themselves in a position of being in a property where it's mortgaged at a low interest rate, but they might need to change their living situation. They may be wanting to move or needing to move for whatever reason. How can people leverage their home equity to facilitate the purchase of a new property, given that they've got potentially a 3% interest rate on the one that they already own, and they're maybe going to be jumping up to 7%? How can we negate that?
Mitigate some of that?
Yeah.
There's several different ways. Two come to mind off the top of my head here, and so the first one would be to take out a home equity line of credit, tap into your equity, and be able to then use that as your down payment with maybe some additional savings funds to purchase your next property, and then be able to keep the existing property as a rental, or if you're just able to keep it. I've had clients, spend half a year here, half a year in Arizona or whatever, and that's kind of how they've done that
Right.
and made it work. And that way you keep your lower interest rate. You kind of you do take a higher interest rate with the equity, but it's the blended rate's definitely lower than what rates are today if you were to refinance it or sell it
Okay.
and
So,
transition into something else.
so if they keep the property they have, they rent it out, and that income coming from there will help
Yes.
offset the cost of the higher interest rate on the new
For
mortgage.
sure. And then you can also work the formula backwards too, and take the blended rate on the new purchase. So you've got your home equity line of credit rate, and then you've got your if you have to take a mortgage out, then at that point on the new purchase, then you blend those rates together to come up with your your actual cost of the money.
Okay. And what's the second way?
The second way is to do what's called a mortgage wrap, where you actually
not heard of
sell
this.
the property, and you sell it on what's called a contract or a mortgage wrap contract, where you would say have the 3%, but you charge the buyer maybe 5 or 6%, which is still lower than market rate today.
Okay.
So the buyer has an advantage there, to where their rate's lower than if they were to take a bank loan.
Okay. Is that a little bit like an assumable mortgage, or is that two different things?
It's two different things. There are some assumable mortgages out there, so that would be one of the first things to look into to see if your mortgage was assumable. Then offering that to a potential buyer is definitely something that's an alternative to getting new financing, and could be really beneficial to the buyer.
Okay.
I have one client right now that's what he wants to retire overseas and doesn't want to take all the capital gains from the sale, so he wants to offer a mortgage, a competitive mortgage. He owns the property free and clear. He wants to offer that to the new buyer and actually be the bank to finance it, so he doesn't have to pay the capital gains all at once. He can do
Right.
it over as he takes the the mortgage payments over the years.
Okay. So what I'm hearing is there are some creative ways that you can move home without taking the brunt of that higher interest rate.
Yeah, it's a lot to swallow to transition from a 5 or a 3% mortgage into a 6% or 7% mortgage today. And there are other creative ways to be able to negotiate rate buy downs when you're purchasing a new property too. So you can do a combination of all this stuff and help save money. And that's where you, like Bernie said, you need to talk to a broker who's experienced and been in the business and has the resources and the outlets to be able to, because you're going to have to engage attorneys and things like that for mortgage wraps.
Right.
And
I must admit I'd never heard of a mortgage wrap.
really.
Yeah. I mean, I'd heard of assumables, but not a mortgage wrap.
Yeah,
I learned
that's
something.
basically just layer your mortgage. There are nuances to it that we won't get into here, but that's more of a detailed discussion on your, actual situation. So.
Right. Okay. So for our listeners then, so if they want to find out more information about wrap mortgages or, taking the equity out of their home and how to transition, where would they get you?
No,
Troy?
tendhometeam.com is the best place to find me. Or just Google Troy Anderson or Tend Home Team here in Woodinville. We should come right up.
And how can they get hold of you by phone?
206-504-3660.
All right. Now you have that lovely home and you have your car and you need insurance. Bernie, how do we get hold of you?
Yes.
Well, if assuming I'm in the office, no, I will be there. SummitIG.com. IGWA.com actually, or 425-984-2255 is our phone number.
Or just find him in Wine Alley.
Yes.
Yeah, go look
Search
at
for me in the
the guy with the big blue T-shirt that says
Yeah.
Summit Insurance on
Yes.
it. All right, and so if people like the show and they want to hear more, Troy,
So they should subscribe, which is Dinging the Dinger on YouTube, and then subscribe on your favorite podcast platform. We're on them all.
we are indeed. All right, well that's our show for this week. Thanks very much for listening to TLC.
Thanks, everybody.
Thank you.
See you next time. Bye bye.
Cheers.